So I begin this week looking at Adobe, which has been a great trade ever since I highlighted the topping tail in the weekly chart about a month ago. To recap, here is your topping tail with trendline resistance holding that goes back as far as October 2018. You then had some profit taking after this incredible run the stock has been on this year. However, broker upgrades continued to support the stock, hence this mini revival. But then came earnings, and that's really where the stock lost momentum. Price attempted to bounce, reaching as high as 634 before the sellers came back in. One of those sellers was the CEO, who sold a large chunk of shares after earnings. The CEO of Adobe sold 40,000 shares at an average price of $620. Now there's a couple of support areas, one at 570 and the other at 552.50. After that, the 200-day becomes the focus area, around 536. It's possible we get as low as the 200-day before bounce, although on the short-term basis, the stock is already oversold. Now, a quick update on Tesla. So Tesla reached our resistance area of 780 to 786, which I mentioned in the last video. Price is currently consolidating around this resistance level, paving the way for a break higher. If this does break, 820 is likely to be the next target. If 780 to 85 holds, price could look to retest previous support levels, with the first one being at 754. This also coincides with the 20-day moving average. In terms of headlines this week, so this headline came out where Tesla's Shanghai factory is still expected to make 300,000 cars in the first 9 months of next year, despite chip shortages. We also had a broker reaffirming Tesla's price target, with Wedbush coming out reiterating a target price of $1,000. One area to watch out for when it comes to Tesla shares, although not a risk at the moment, Cathie Wood continues to sell Tesla shares. Now the reason being, data showed this week that money managers withdrew nearly $300 million from Cathie Wood's ARK fund. Now Cathie Wood's ARK fund invests a lot in high growth companies, and bond yields have been rising in the US. That's been hurting growth funds. The idea is that if interest rates rise, it's the technology companies that have debt that will be hurt by the interest rate rises. So you're seeing growth stocks get hit when treasury yields rise. And this is what ARK Fund is all about. They invest in these types of companies. And so what happened was this week, big outflow in ARK Fund. And that meant that ARK continued to sell Tesla stock. What they tend to do is they tend to trim winners when the stock sees outflows. Now, although this hasn't hit the stock, it's still worth keeping an eye on. If we switch focus slightly and have a look at the S&P 500, I mentioned in my video last week how 4470 to 4475 was a key level to determine if the selling was over. However, as you can see from the daily chart, price did not breach this area, keeping bears firmly in control. It's likely we'll see further downside. Also keep a close eye on this 4-hour chart, because there's a potential head and shoulders pattern that may be emerging. Those that want to know more about head and shoulders pattern, I have a separate video on this, which you can find in the description box below. Now with the neckline being at 4350 and the head at 4480, if this pattern plays out, price is likely to head towards 4220, which coincides with the 200-day moving average. So keep an eye on that one to see if that pattern plays out. Now before I finish up, my new trade idea for this week is Accenture. Accenture is a professional services company that provides IT services and consulting. And the company recently reported earnings on the 23rd of September, beating on earnings, but just missing slightly on revenue estimates. Now it forecasted revenue that came in better than analyst expectations, with revenue coming in at a range of 13.1 to 13.5 billion. And you can see here from the daily chart, the stock jumped on the day of earnings. Company also announced a $3 billion stock buyback. However, you can see the stock hasn't really taken off since then. And in fact, you can see it's broken down this week, closing below key technical moving averages. Price has broken a key trend line on the daily chart. And if you have a look at this monthly chart, you can see price is putting in a topping tail. As I mentioned in my previous videos, how Adobe got pumped by the brokerage firms, the same thing is happening with this stock. Look at the number of broker upgrades following earnings. This is another reason why it's due a pullback. The 315 to 316 area is likely to be the immediate downside target, so keep an eye on that one. So there you have it, folks. That's my weekly update. Thanks again for watching, and I'll see you at the next one.